It's a Red Sea out there with markets tanking around the world, and now everybody's wondering, are we in a recession? What's up everybody, I am Jaspreet Singh and welcome to the Minority Mindset. Something's wrong. Exactly 1 month and 5 days ago, unemployment was at record lows, the economy was booming, and the stock market had just hit a record high. Today, it looks like things are changing. People are worried about getting laid off. The stock market has lost trillions of dollars worth of value as interest rates were slashed to zero, and people around the world are brawling over toilet paper. I don't make videos on Tuesdays, but because things have been so crazy in the financial world, I'm gonna try to make daily videos to help you take care of your money. Today, I'm going to be talking about whether or not we're going into a recession. So make sure you watch this video until the end, because in the end of this video, I'm going to be showing you the one factor you need to be paying attention to see if we're going into a recession or not. But before we get into that, smash that thumbs up button below and subscribe to the Minority Mindset YouTube channel. That way you don't miss our new financial education videos every single weekend. Hit the little notification bell too, because if you don't, then YouTube doesn't let you know when our new videos are released. Everyone assumes that the stock market crash that we just saw was caused by this pandemic, but that's wrong. It was just a catalyst. It goes much deeper than that. Think of it this way. We have been in the longest growth period or bull market in the history of time. Ever since the 2008-2009 crash, where we were at rock bottom, things have gone pretty much straight up until February 2020. That's a solid 10, 11, 12 years of growth of pretty much everything going up, and couple that with low tax rates for businesses and people believing that nothing could ever slow down the economy. With all this confidence and growth over the last decade, you would think that businesses would have the cash and the savings and the resources to take care of them through a rough patch, kind of like we're seeing right now. Turns out they don't, and lots of businesses are actually strapped for cash. For about 2 years now, I've been talking about how our economy has been kind of shaky because we've had so much debt fueling our economy. Businesses have been loading up on all this cheap debt, and we might look back and say that it was the reason that some businesses grew too big too fast, and all this cheap debt made these crazy high valuations, especially for startups. And it also was one of the reasons why stock market values were so expensive. This made people feel really good about the 401k, but the numbers didn't really make sense. Greedy business people. But it's not just businesses. Regular people have been doing the exact same thing. People have been spending all this money as lending practices have become so loose. Again, because when people want a brand new wardrobe, they don't want to wait until they can afford it with cash, they want it now. Just look at the numbers. I mean, stores have been making just as much money from selling their financing as they have been from selling their products. I mean, they said Macy's made something like 40% of their profits just from their credit card. That's why every store you go into has a sign saying no cash, no problem. Finance it with 0% APR today. People have been spending like crazy, and when you don't have money to spend, you finance. Now, to be fair, high debt and high expenses aren't a problem by themselves when things are good. But when things slow down and money tightens up and the tide goes out, that's when you see who's been swimming naked. We've been living on the edge, and now we might have pushed too far. On February 7th of this year, I released a video titled How I'm Investing My Money in Today's Economy, and I talked about how I was selling because I was worried about the economy, and I got comments from people saying that I'm just trying to scare people. 5 days after releasing the video, the stock market broke record highs, and how could anything be wrong with the economy if the stock market is breaking records? Now, 1 month later, people are panicking. Now, to answer the question, are we in a recession right now? No, we are not. Will we enter a recession? Maybe. And I'm going to be telling you exactly what you need to look for to see if we're entering a recession or not in just a minute. But before I get into that, I want to talk really briefly about why financial education is so important right now. When things are good and the economy is booming, people get euphoric and they think that nothing bad can happen. When things are bad, especially if we're in a recession, that's when people panic and they think the world is going to end. Now, obviously, there are real issues in the world right now, and your number one priority should be to make sure that you and your family are healthy. But strictly financially speaking, the difference between the person who becomes and stays wealthy and the person that loses everything is their financial education. I'm not gonna go deep into money management and investing in this video because we have tons of videos on that on our channel, and we even have a free ebook on money management and investing that you can read for free when you sign up for our financial education emails, which are also free. And you can get our ebook and start getting our financial education emails by clicking the link up here or by clicking the link in the description below. So what will determine if we enter a recession? Simple. Whether businesses have enough cash to survive or not. Businesses across the globe are shutting down right now, and even if a business is open, people are not spending their money right now, which means sales are tanking, profits are dropping, and cash is drying up while expenses are piling up. Now, if businesses were truly in a strong position, they would have the resources to make it through a 6-month rough patch and stay in business and recover. But the majority of businesses are not. That's why the government, the Federal Reserve, and investors are panicking. If businesses start shutting down, then you're gonna start seeing layoffs. If you see layoffs, people are not gonna have money to make their mortgage payment or their car payment, and people are not gonna spend money. So more businesses are gonna be affected and more businesses are gonna shut down. And now you're in a recession. But if businesses can survive this rough patch and they can stay in business and people can stay employed, we will divert this recession and things will be okay financially, at least temporarily. The question right now is, how do businesses find the cash to stay alive if people aren't spending money, businesses don't have any revenue, and if businesses don't have the cash reserves to push through? Debt. Did you just say dead? No, I said debt. For the last few weeks, businesses have been running to banks to borrow huge sums of money through these emergency loans, trying to stay afloat so they have the money to pay their employees and stay in operation. Everything seemed okay. Remember, I'm just a random guy on YouTube. I don't have any insider information. But on March 12th, 2020, the Federal Reserve, or the Fed, told us that things were not okay. The Fed came out and said that we might be having liquidity issues, and they made it very, very confusing with terms like repo operations and floating rate notes and nominal coupons, probably so people wouldn't understand what they were talking about and panic even more. But in simple terms, what they said was that they were worried that banks would run out of money. That's why that same day, the Federal Reserve made a $1.5 trillion emergency cash injection into the economy to prevent a liquidity or credit crisis. In other words, the Fed wanted to make sure the banks wouldn't run out of money. And apparently that wasn't enough, because yesterday, the Fed came out with another $500 billion emergency injection into the economy. I wish I could tell you that it ended here, but it gets a little bit worse. At this point, people thought, okay, we'll be okay because now banks have money, and so businesses can go to banks and borrow money and things should be fine. Turns out the insiders were hiding more information from us, because on March 15th, Sunday evening, the Fed came out with another emergency meeting and they announced that they are going to slash interest rates to zero. And they started quantitative easing too. If I translate that, what that means is businesses were able to get loans because of this emergency cash injection, but businesses couldn't afford the interest payments on their loans even though interest rates have been historically very low. That's why the Federal Reserve had to come back in and slash interest rates to zero. This way they can make loans more affordable. This way businesses can afford to stay in business. Why did they do it randomly on a Sunday evening instead of waiting until Monday morning? Probably because they knew that investors would panic and they didn't want the stock market to tank, even though the very next morning the stock market tanked 2,000 points at the open. 0% interest rates during a non-recessionary time is very bad news, but I'll be talking about that during a later video, so make sure you subscribe and hit the notification bell. But right now, the government and the Fed are trying to do everything they can to essentially give businesses free money. This way they can stay in business and not have to lay off employees, and so we don't have to go into a recession. Will it work? Well, if it does, we will avoid a recession and the stock market will probably recover pretty quickly. If it doesn't work and people keep getting sick and you see more quarantines and businesses are shut down and people are not spending their money, then you will very likely see businesses start shutting down, and you will very likely see a recession happen and the stock market come down even harder, and you might see negative interest rates for the first time in American history. Like yesterday in my state, the governor ordered that all restaurants and gyms need to close across the whole state. These are things that me and no one has ever seen before. I'm gonna reiterate this. The most important thing here is your health. So take care of yourself and your family first. Obviously, if you're not healthy, nothing else matters. And secondly, you need to take care of finances, and chances are we are going to enter a historic buying opportunity where you will be able to buy great companies at massive discounts. Again, I'm going to try to keep you updated daily, so make sure you subscribe, and you have our ebook in the description below as well. Thank you for watching. If you enjoyed this video, wash your hands and then share it with one friend. If you want to watch the video I released on February 7th, where I talked about how I was investing my money a month ago, you can watch the video on YouTube by clicking this button right over here. Thank you for watching, and as always, keep hustling.